market took a positive momentum this week, with the benchmark indices closing the week in the green, with the Monetary Policy Committee increasing the central bank rate. The expectation is thus expected to ensure that inflationary expectations remain anchored while setting inflation on a firm downward path, as Natasha Wairimu now reports.
A very good evening and welcome to this week's market summary with me, Natasha Wairimu. Now, the Central Bank of Kenya Monetary Policy Committee made the decision to raise the central bank rate by 200 basis points, bringing it to 12.50% from 10.50%, reason being to address the pressures on the exchange rate and to mitigate second-round effects. Now, second-round effects refer to the indirect impact that changes in the exchange rate can have on other aspects of the economy, such as prices and inflation. And in as much as the Monetary Policy Committee was comfortable with inflation playing at 7.5%, the actual target, get this, is 5%. But what does this move actually mean?
So by raising the benchmark rate by 200 basis points, the central bank aims to attract dollar inflows back into our balance of payments account, and in this way stemming the volatility on the Kenya shilling. Going forward, there's really minimal headroom for the central bank to keep up pacing rates before we start to see economic growth start to dwindle. And this, of course, comes because the higher the rate of borrowing, the lower will be the investment activity in the economy. And consequently, unemployment numbers begin to swell and output growth begins to decline.
Market was leaning towards an upward trend driven by bullish sentiments across select blue chips in the telco, construction, and banking sectors. The benchmark indices closed the week in the green. The Nairobi Securities Exchange All-Share Index gained 1.8% week over week, with the Nairobi Securities Exchange 20 and 25 share indices gaining 0.2% week over week. The Nairobi Securities Exchange 10 share index remained largely unchanged from the prior week's levels. Safaricom was the week's top traded counter, accounting for 79.7% of the week's activity. The telco gained 3.6% week over week to 14.55 Kenya shillings. Banking stocks dominated the week's top mover chart, with Stanbic being the best performing top mover on a 6.1% week over week rally to 108.25 Kenya shillings. Bamburi continued its winning streak, closing the week as the top gainer on an 18.0% week over week rally to 41.35 Kenya shillings. Everready East Africa shed 14.5% to 1.12 Kenya shillings to top the losers chart. That is all we had this week on stocks and markets. Be sure to tune in next week for more. My name is Natasha Wairimu.